Hello, everybody. It's Denise Vickers, the Headband Realtor with Keller Williams Success Realty. And I am so thrilled to be here today with my friend Lindsey Chapman. So first off, I just want to say that welcome to Lindsey and to anybody who's watching this recording at a later date. This is the inaugural episode of my new segment called Off the Top of My Headband. This is real talk about real estate topics. And over the course of the next few weeks, I plan on having, Lindsey's a loan officer. I plan on having other experts in the related real estate industries like home inspectors, title specialists, insurance agents, because all of these partners, I bring these people to the table and together we work together to make sure that real estate transactions go smoothly. So I'm honored, Lindsey, that you were willing to be my first guest. In doing this, I'm blending my 34-year media career with now my new real estate career. And my goal is to help educate anybody who happens to stumble across these videos, and help them learn more about the home buying process. And, this is for buyers, this is for sellers, this is for investors. This is really for anybody who is thinking. This can be for first-time people or people who are veterans in the industry. I'm hoping that we'll bring information that's going to help a wide variety of people. My goal is to do this weekly, but the timing and the frequency is also going to depend largely on the availability of my guests. So before I introduce Lindsey and her expertise, I just want to quickly say where I am. So today I am coming to you from 2400 Grand Flora Boulevard. This is a fantastic condo that I have listed. It's a 3-bedroom, 3-bathroom condo that overlooks St. Andrews Bay. So I have a gorgeous view right out to the left of my to screen left here for me. And this condo is listed for $499,000. It is a gated community and it is a fantastic value. It is in Panama City Beach, but don't think of it as, the crazy part of Panama City Beach where all the tourists come. This is quiet residential area, and this is perfect for investor snowbirds or somebody who's looking for a primary residence. But let's get into the heart of our conversation today. Lindsey, I first met Lindsey very early in my real estate career when she hosted a workshop for realtors to really help educate us on the mortgage industry and help us help our buyers. So, Lindsey, tell our listeners about yourself. How long you've been in the business, and a little bit about CrossCountry Mortgage.
Hey, well, thank you for having me, Denise. I'm so excited to be here. I think this is a fantastic segment, and I love how you're blending media and real estate. So that's really, really cool and creative.
Thank you.
So, as your first guest, this is really exciting for me. So, a little bit about myself. I am a mortgage lender with 10 years experience. I started in 2015, right when I just learned the good faith estimate and the HUD, and then they switched it up on me and they changed it 3 months later to the closing disclosure and the loan estimate. So that tells you the time frame that I got in the business. And also before everything was electronic. So we did a lot manually and by hand. And I like to think that that does give me a little bit of a hand up when it comes to some of the processes and some of the hand holding sometimes that I love to do with my buyers, because I want them to feel comfortable. I want them to feel like they can approach me, they can come see me. So that's just a little bit about my background. I specialize in VA loans, DSCR, which is debt service coverage ratio for investors. We have no doc, like bank statement loans. We do 1099. So we have a wide plethora of products, and I work for CrossCountry Mortgage. And so CrossCountry Mortgage is the vehicle that gives us the products that allows me to open up opportunities for people, is what I like to say.
Yeah.
I've been doing this 10 years. I love to help people, first-time home buyers, investors, whether you're, maybe you're upsizing, downsizing. I help them all. So down payment
Yeah.
assistance.
Yeah. And do you do refis as well?
Absolutely. Yep.
Yeah.
We have a very competitive rate on refis. We're about to get into a refi boom. I know that we're going to talk a little bit about what the market looks like in the future, so I'll touch more on that. But absolutely, we refis are something we're very, very good at that we do here.
Yeah. And you're local. You're right. You're local to this area.
Yep. We have an office in downtown Panama City, 55 West 5th Street. I always joke that that sounds like a made up address, like in the movies, like all the phone numbers are 555, like 55 West 5th Street. But that is our real address. We're across from City Hall. We have really, really cute Christmas holiday murals in our windows right now. So we invite anybody to come down, check them out, and come in and see us.
Yeah, and I should have mentioned too that my Keller Williams offices, I have an office in Panama City Beach, on Panama City Beach Parkway, and also we have a brand new office in Port St. Joe, which I'm super thrilled about because I live in Mexico Beach, so I'm going to be spending a lot more time at our Port St. Joe office on Cecil Costin. So let's get in now, Lindsey. The very first question right off the bat that I want to ask is. How important is it as people are starting to think about buying a house, buying a condo? How important is it for them to get pre-qualified before even beginning the search for a property? Tell me about that because I try to encourage my buyers to get pre-qualified before we start. So, what's your take on that?
That's one of my favorite questions ever because it is so, so critical and so important to find out because you're paying a payment. And what it boils down to at the end of the day is you want to know how much your payment's going to be. And many times I found in my experience that when people start shopping before being pre approved, sometimes they find out, or many times they find out that their payment expectation is outside of the scope of the properties that they're shopping for. And then it creates a lot of disappointment and frustration. Um, Even for people who seemingly may be very qualified, it's important, especially for different property types like condos, because HOA dues vary so wildly. And so when you're shopping for a condo, it's very critical to let a lender look at your finances and make sure that you're qualified for that product because it is different than purchasing a traditional home. The
Yeah.
qualifications are different, the parameters are different. It's a lot more riskier of a product. So you might find like debt to income ratio maybe a little tighter. So that's step one is, even if you're like, hey, I bought and sold many homes, but I'm looking for a condo, an investment property, it's still very important to get with a lender. Our market is very different when it comes to condos. Our market has a lot of what we call condo tails and non-warrantable condos, which are condos that cannot be purchased by Fannie Mae, Freddie Mac. They can't be guaranteed with that. So what that means is that we have to find private investors to purchase those loans, and that's what makes the parameters different. So even if you seasoned person, you've done it many times, first time home buyer, I always say get with your lender first, make sure your expectations match the reality, right? Because we always see on like social media Instagram versus reality, and that's very true when it comes to the pre-approval process. Make sure that you're getting a true pre-approval and not just a pre-qualification. A pre-qualification is just you submit an application online and enter your information, and a lender just looks at that and says, okay, you're good to go. Versus a pre-approval is where I, as a person, go in and I look at your pay stubs, I look at your tax returns, I look at your bank statements. I actually dive into what an underwriter would look at to make sure that I'm not missing any I's dotted or T's crossed.
Yeah, and so listen, I want to hit on a couple of things you just said. So she used a term warrantable or non-warrantable condo. A quick plug, again, I'm at this wonderful three-bedroom, three-bathroom condo that I have listed at 2400 Grand Flora Boulevard. This is actually a warrantable condo, which is rare. And as she said, there's so many different criteria that make it warrantable or non-warrantable. And again, if it's non-warrantable, it doesn't mean you can't get financing. Just means it may be a little harder, and the terms may be a little bit different. But if you're interested in this one, it's warrantable. So that's a plus. And thank you to somebody who has joined us. I just want to say this is being recorded. If you have a question, please pop it into the chat or unmute yourself and ask a question. I do want to also say Lindsey has certain things that she can't, as the mortgage lending industry is very highly regulated. And so there are certain topics that she can't talk about. And she'll just let us know if we ask a question, if I ask a question, or if a guest asks a question that she's not allowed to touch, she'll just let us know. But we want to make sure that she stays within compliance within her industry's regulations. So my next question is, we talked about the fact that you're local, you're right here in Panama City. Why should home buyers and condo buyers consider using a local lender, a local mortgage lender, instead of some big online lender? Not to say there's anything wrong with those, but why is it better, in your opinion, to use somebody local?
Because I'm the best. No, I'm just kidding. No, the why it's important, whether it's me or anybody else, we have a lot of really, really great local lenders here in our area and in our market. Why that is important is because many times we as lenders are getting referrals from local realtors because we have a relationship with the local realtor. What that means is that I'm going to work the hardest I can, the best I can, and be a fiduciary to you as the client, but also be very transparent to make sure that the process goes very smooth. And the reason why is because I have an interest in making sure that you get to the closing table and you have a great experience. What happens if you don't have that great experience is that your realtor who's referred several clients to me, that your realtor is not going to do that anymore. And I don't want that to happen. So that's like the common sense answer, right? Like the common sense answer is I have an interest because this is my livelihood. This is my bread and butter. But the second thing that's very important that I tell people is that I'm familiar with the market. I'm familiar with the area. I'm familiar with the nuances because every real estate deal is different. There are areas, for example, in our market that are called COBRA zones. It's a flood zone. It's a very special flood zone called a coastal barrier resources area. I know where those are. If I see a property that comes across my desk on a contract that's in that area, I'm going to know right away, and I'm going to set those expectations properly regarding flood insurance, which is much more expensive because FEMA doesn't offer flood insurance in those areas. Your flood insurance factors in your debt to income ratio. If you go with an online lender that is not familiar with that property and with that type of insurance, they're going to way underestimate your cost for insurance. And then when you do finally get a quote from an insurance company and you hand it over to that online lender, your insurance rate is going to be at much more, your payment is going to be much more, and then your debt to income ratio could be impacted, and then you no longer qualify. What happens when you no longer qualify? You might lose your earnest money deposit that you have on the contract. So that's just a very specific example, but there's
Yep.
so many that I could go through. So if that helps any to understand why it's important to go with somebody local.
Exactly. And, I just can't say, how much more smoothly it goes for the buyers and the sellers, when we're dealing with people who are local. I mean, as you know, Lindsey and I have a relationship. I can pick up the phone, I can go over to her office, we can meet over coffee, and we work together along with the title agents to make sure that you get to the closing table. We get creative. When we're dealing with people, when you go with a lender that I have no relationship with, then, there's really no interaction between me and the loan officer. And, there's not that collaboration to help people, overcome whatever challenges that may come up in the real estate transaction process. A quick story that has nothing to do with the lending, but I represented buyers in a transaction where the title company was not local. I will never do that again. I never could get anybody on the phone ever. I swear to you, I think they were AI bots, and it was a nightmare. I didn't think we would actually get to the closing table. We did, but it was very stressful for everyone involved. And my goal, and I know your goal as well, is to try to make the real estate process as stress free as possible. All right, next question. So, we hear a lot about interest rates in the news. They're constantly in the headlines. So, what should buyers and sellers actually be paying attention to in today's market? We hear about the Fed is cutting interest rates, yada, yada, yada. What should we actually be paying attention to?
I love this question too. So the main thing what you're going to want to look at when you're shopping for a mortgage, because interest rates are going to be pretty across the board for most lenders. You might see a variance in, like an eighth of a percent or something like that. But what you're going to look for is what the fees that they're charging you, because I can quote somebody on, let's just say this is an example. I could quote somebody a 6% interest rate with no fees. Well, the next lender, they might say, oh, hey, Mr. Jones, I can give you 5.5%, but their fees may be $5,000 or $6,000. Well, I could take that same $5,000 or $6,000 and I could apply that to act as a rate buy down to actually make my rate lower as well. So sometimes that's kind of a bait and switch tactic that lenders can use is they offer a much lower rate, but you need to be paying attention to the fees that come along with that rate. The best indicator of that is looking at your APR. The bigger difference between your actual interest rate and your APR, that means the more fees you're being charged. So I say definitely pay attention to fees. We are expecting a rate decrease in 2026. We're expecting, I believe, at least three. However, that's not a good indicator of whether you should wait to buy or not. And the reason why is because not only are home prices increasing, so values are going up, but also when they say, oh, well, the Fed has cut the rates, cut compared to what, right? Because the rates change every day. So when you see a headline that says, oh, the Fed, the rates have been cut, well, it might be the same rate that you had 2 weeks ago because the rate went up. They don't really tell you when rates go up like that. So they only tell you when they go down. So you don't really know where the goal line sort of moves, right? Because it's an ever-changing market. So you just don't know when they say, oh, rates are lower. Well, lower compared to what though? So
Right.
I strongly encourage people, take your headlines with a grain of salt. Um, Pay attention to when you're shopping. The time to buy is now, always, because again, home prices will continue to go up. I don't care what anybody says. We're not looking at another 2008. Regulations and lending have changed. Compliance measures have changed. So there's no more of that housing bubble. We aren't looking at that at all. Pay attention to what your APR is, what your fees are, and then of course, who do you enjoy working with? Who do you trust? Because at the end of the day, you don't have anything if you don't have trust with the partner that you're working with.
Yeah, exactly. And just to reinforce something you said there, right now is a great time to buy. It is a now, I cover everywhere from 30A all the way over to beyond Apalachicola. So, if you're thinking about anywhere along the Emerald Coast, the Forgotten Coast, I can represent buyers and sellers and investors all along there. But right here in Panama City Beach, it's definitely a buyer's market right now. We have so much inventory between single family homes and condos. Last check, it was like 13 months of inventory. So what that means is if nothing else came on the market today, it would take us 13 months to sell all of the inventory that is currently on the market. So this is a great time for buyers to be getting in the market, especially if you're looking, to be an investor. And a lot of the sellers are having to make more concessions, closing cost concessions, things of that nature. So, and right now, during this kind of holiday period, it's also a great time because a lot of people are kind of sitting on the fence. So savvy investors are not waiting. They're getting in and they're making deals right now. So I encourage you guys, if you're watching this, give me a call. Okay, you hinted at this earlier. You talked about the acronym DSCR. So for real estate investors, what is a DSCR loan? Why has it become such a popular option in today's market? Help make sense of this.
Okay, so this is one of my specialties. I love these loans. They are a great vehicle for somebody who is an investor wanting to really start their portfolio, or if you're seasoned and you have a huge portfolio, they're still great. They're great all the way around. DSCR stands for Debt Service Coverage Ratio, and basically what it means is that all we are looking for as the lender, in addition to making sure that your credit is good and qualifies, which our minimum score requirement is a 660, so it's very lenient when it comes to these type of loans.
Oh,
So in addition to credit score, making sure you have the assets, which is going to be the down payment and closing costs to cover, the purchase transaction. The main qualification factor is not your income; it is the income that can be potentially generated from the property that you're looking to purchase. And so, why that can be great is because many times, especially if you're a seasoned investor and you have a huge portfolio, you are taking a loss on a lot of your properties in the first, 1 to 4 years. And so, what that does to your debt to income ratio, it tanks it on a traditional loan because you're writing off, you're submitting tax returns, you're writing a lot of things off, your initial, your interest and all these things, right? And so if you're using just the debt service coverage ratio of the property you're looking to purchase, that's all we're looking at. We don't need to consider the loss on everything else, or maybe you're self-employed and don't claim a lot of income on your tax returns. We're not looking at any of that. So it's very non-invasive when it comes to a loan product, but it also opens up opportunity, and that's where I think it's a very smart product because too, versus you looking at as a client or a consumer looking at something because oh, this looks great, this is in a great area, we vacation here, we think we want to use this place. You really get a lot of education on the front end about what the rental income potential is because we have to use that to qualify. So then you're looking at it not only, and that's why it's great for first time investors too, because as a first time investor you may not understand the analytics of that, you may not understand what that looks like or understand the market or the area. But when you have your realtor who is helping with some of the projections, you have your lender that depends on those projections. We're doing a deep dive in our due diligence to make
yeah.
sure that that ROI on that property is going to be beneficial and behoove you to purchase it.
Yeah, basically, is it going to cash flow?
Correct. Yep.
Exactly. So, and with that, are you taking, like let's say somebody's looking at a property that has never been a rental property, a vacation rental before. Does it have to have a proven history, or can you take projections from, we have lots of property management companies around here that provide, projections. Can you take that, or does it have to have a proven rental history?
That's a great question. So for me personally, CrossCountry Mortgage, this is what makes us stand out. A lot of other lenders, and I've worked for other lenders before, so I landed here because of this is one of the reasons. But other lenders will not consider short-term rental income, first of all. So there's many other lenders that won't even consider that; it's off the table. So that can kill the deal right away. But second of all, they may not consider rental that isn't already proven, whereas we'll consider short-term rental income. CrossCountry Mortgage will. We will also consider projected rental income even if there's no rental history, as long as there are comparables. So for
Mhm.
example, if it's a condo unit, we the appraiser will pull comparables around that unit. Or if it's a standalone single family, they'll look at the neighborhood, look at the characteristics of the neighborhood. So we're able to use those tools. Another tool that's very unique that we are allowed to use in our underwriting procedure that many other lenders won't even think about using is AirDNA. AirDNA is a website that provides rental analytics, and if it shows us that there's at least a 50% occupancy rate, we can use 80% of the Airbnb AirDNA projection, excuse me.
Mhm.
And so that also has helped at times where maybe there was a home that didn't have the comparables, or the appraiser just couldn't find short-term rental comparables. It was long-term rent, which we all know is much less. Then I've saved the day by pulling the AirDNA report and able to substantiate that rental projection, and we were able to close the deal.
Hey, I want to go back to something I forgot to say earlier when we were talking about, local lender and knowing the market and those kinds of things, and the nuances of condos. I recently had a deal fall through, an investor that was had really done a lot of due diligence, but they hadn't gotten pre-qualified and they thought that they had enough money and they had a substantial money. But where the rub, what happened is that they needed to, because of the type of condo and all of that, they ended up needing 25% down. And so once they had, and they were only really anticipating, somewhere between 10 and 20% down. And that extra 5% killed the deal because they also wanted to make some renovations to the property. And so that, goes back to what we were talking about, getting pre-qualified and how important that is. And then another thing too, and remind me, do you handle land loans or not? I don't think you do it right. And so just as a quick aside though, with land loans, oftentimes 20% is required down. And, so these are the things that when I'm working with buyers, I'm trying to make sure that I'm pairing them up, not only with a lender, but the right lender, to make sure that we get the right lender that does the right type of financing for their project. We're going to run out of time here in just a few minutes, so I'm going to try to get in one or two more questions. And you talked about also being VA loans being a specialty of yours. So tell our audience, anybody who's watching this, about VA loans, and they're often misunderstood. What are some of the biggest myths you see when it comes to VA loans?
A great question too. So as you know, Denise, that our area, we have three major military bases within a very small radius. And so we see a lot of military buyers. It's very important that your military buyers are working with a lender who's experienced in VA loans because there are a lot of nuances, not to say that they're difficult or hard, but there are myths that a lot of people shy away from VA loans because of the myths that they've heard. And it's particularly sellers shy away from accepting a VA offer. And some of those myths are, I know back whenever everything was on paper, sometimes it would take, 6 months to close a VA loan. That's not the case anymore. We close VA loans in-house. They don't have to go through the VA first. We don't have to have any type of approval from the VA first. Everything's electronic. We can close loans. I've closed loans in as little as 14 days. VA loans, very straightforward. Another myth is that the appraisal requirements are much more strict than conventional financing. That somewhat bears some truth, but not always, because what I found is that especially after we had a Hurricane Michael, major Category 5 hurricane, and there was a lot of homes that needed repairs, or there were certain issues that prevented them from being able to utilize financing. And so there were a lot of realtors that were under the impression that conventional was a catch-all, that okay, well, this has a hole in the roof, it can go conventional, or we're not going to accept VA or FHA. Well, actually, ever since 2008, appraisal standards have really tightened up, and conventional financing is really going to flag most of the same things that VA or FHA will flag. So sellers, if they've got, they don't have flooring, they don't have drywall up, they have, leaks in the roof. Those are all things that are going to disqualify that property from any kind of financing. Now, there are things that maybe VA is a little more picky about, and it's just for the safety and the soundness for the veteran buyer. So foggy windows, that might be something that FHA or VA would flag because that could be a safety concern or an habitability concern. That might be something conventional financing wouldn't require a repair on. But again, if it affects the value, then it could. So that's another big myth is, sellers don't want to accept VA offers because they think that the appraisal is they're going to rip them apart, but it's not true at all. Really, if the home is move-in ready and if there's, minor things, typically, VA looks at it, we fix it, we move on. I have a lot of good solutions. We've closed in repair escrow, which I don't think we have enough time to talk about, but there's just solutions that we have available, especially with an experienced VA lender, that we can work around and even close the deals because of the creative solutions that I have availability to.
Yeah, and again, you're right. There's so much more we could talk about. We don't have enough time. But just one other thing too, on the flip side of that, for buyers, when they see in an MLS that there's a VA assumable loan, that can be an attractive thing too, because sometimes there are lower rates and in there, and there's just interesting things with VA loans that, like you said, there are myths associated with that. All right, my last question is, let's look ahead. You don't have I know you don't have one of those crystal balls, but if what you've been in the industry for a long time, you can spot trends. So what trends do you see coming in the next 6 to 12 months that buyers, sellers, and investors should prepare for now?
Definitely with market rate decreases coming, and that there's a lot of hype around that. As you know, trends have a lot to do with hype and consumer confidence and the overall feeling in the market. So as interest rates begin to go down and as that starts to buzz, that's going to create less inventory. And if you have ever studied economics before, you understand the
Supply and
elasticity
demand.
of demand. And
Yep.
when that demand starts to go up, then that also makes the interest rates go down, creating demand to go up, and that creates a seller's market again. We'll start shifting back into the
Prices.
seller's market. So seller concessions aren't going to be as prevalent. Maybe you're going to have multiple offer situations. So that's why, like we had said earlier, now is the time to buy. You can always refinance later if you're not comfortable with the rate. But as you start to see the demand increase, prices will increase. The overall offers are going to increase, and so you're going to it's going to be a situation to where you're competing, and then that takes leverage from you as the buyer to leverage seller concessions, closing costs, repairs, you name it. Maybe you're not going to be able to buy in a desirable area that you want to be in because there's so many offers coming in. So just prepare as a buyer. If you're looking, don't wait on the fence for too long. Get with your realtor, get with your lender, start doing the footwork now, because when it happens, it's going to happen fast and you want to be prepared.
Wow, that's such great advice, and I think that's a really great closing thought there. Is there anything else that you want to share? Anything else you thought, oh crap, I should have said that, or anything else? But that's a really good point, to end on. Anything else we missed?
Um, I think we covered a lot today. As always, if anybody has any questions, feel free to reach out to me. I operate from my cell phone, so you can call or text. My phone number is 850-628-7447. Again, I'm downtown, 55 West 5th Street. I'm happy to answer any questions. Denise is also a great resource to help with questions about the property conditions, and kind of we can both work together to get you guys where you need to be. So I think that's all I have to say.
Yeah. Lindsay, that cell phone number again, 850.
628-7447.
Well, thank you so much for being my first guest on Off the Top of My Headband, Real Talk about real estate topics. You did fantastic, so educational for not only for me, but for anybody who watches this at a later date. I'm grateful for our relationship and for your expertise here in the local marketplace. I'm Denise Vickers, the Headband Realtor from Keller Williams Success Realty. My cell phone number is 256-682-1010. Like Lindsay, we are available on our cell phones by call, by text, and all exactly. We live on our cell phones, 256-682-1010. As Lindsay said, now is a great time to get into the market. It's a buyer's market here at the beach. And I'd love for you to especially take a look at this condo, 2400 Grand Flora Boulevard. It's at Magnolia Bay Club. Fantastic value here. And my seller's very motivated. So, make an offer. Again, Lindsay, thank you so much to you. And thanks to CrossCountry Mortgage for lending us your time today to educate our audience. Thank you again, Lindsay. Take care. Happy New Year.
Denise, Happy New Year.
Bye bye.
Bye.